Business and tax documents are key elements in an organization, and the way they are treated is crucial to make organizations efficient and competitive. Examples of such documents are bills and invoices, orders, cost estimates, way bills, requisitions, etc. They may be only internal documents, our documents for third parties, as well as documents from third parties. Each organization can create the types of documents they need. Documents feed several subsystems. Once the documents have been recorded into the system, this is smart enough to perform the reflections over documents in the various subsystems automatically. Let's see that.
Documents are reflected in several subsystems with emphasis on accounting, budget, and treasury, fixed assets, and stocks. Thus, great part of the operations in accounting is done automatically, as automatic reflections of those documents. These reflections also ensure the respective tax information, including the elements for digital tax information, as well as other ones that public systems have been demanding with greater and greater detail.
These documents also support several types of electronic and certified invoicing. In this video, we shall give priority to common facilities and address these extensions quite briefly. It is important to note that these documents are found in very different settings in organizations. They are found in sales, purchases, internal consumption, and so on. Now, when it comes to our modules, these are different document scopes. Each organization can create the scopes they deem necessary. Documents are treated similarly, with many well-known facilities under different scopes. This is a great advantage in terms of learning. However, there are some specific contexts which are the object of modules of their own, although documents are treated in them as well. This is, for instance, the case of consumption stocks, which have a module of their own. Anyway, understanding and knowing how to deal with business and tax documents is one of the main bases in order to take advantage of the Altoga modules in both financial and commercial areas. Working with business and tax documents is fundamentally working with the rows of these documents. The system automatically groups and synthesizes these rows under the format of documents. Our attention is then focused on a single outlook, the outlook of rows, and we usually work on a single menu option. Thus, in the examples we are about to present in this video, we shall be viewing a document along with its rows, although several commands we will be executing relate to the document as a whole. This is the case of confirmation and issuance of documents, their dispatch to Treasury, Accountancy, among others. Let's now see the first and most basic facilities available to treat business and tax documents.
Let's consider the general aspect of the work list of documents. Here's what such a listing looks like. The third document displayed is a certified invoice, a document of the type CFT with the number 2010-0001. It's for the customer Semapo and concerns lighting fixtures of the brand Pilote. As we can see, this document has two rows. The lighting fixtures are in row 5. The code of the product is PAAI00001, and its description is abbreviated. Its technical details are in full. We can see its price, quantity, and unit price. In row 4 are the assembly services regarding those fixtures. A point worth mentioning is the long text on technical details, which is an important factor for distinguishing our web modules from traditional applications. The display of more and more information in documents has become an increasingly necessary requirement, and our modules are up to that mark. Let's now see a row in depth. At first glance, it seems to be a somewhat complex screen. Nevertheless, this is necessary if you are to treat documents efficiently, and the fact that the fields are arranged in a very structured way makes its completion very easy. Most fields, especially the ones displayed in darker gray, are protected, which means they are primarily for information purposes. The information about the document and the third party is inserted in the first part. The information about the product, its prices and values, is inserted in the second part. And the information about taxes, automatic accounting, cost centers, and contracts is inserted in the third part. Let's now return to the work list. We shall highlight in this work list this area of commands. By moving the cursor over it, the system informs what the command at issue is, and all you have to do is clicking on it to execute the command. V+, confirm document. V-, undo confirmation. T+, send document to Treasury. T-, undo sending to Treasury. N+, assign accounting number. G+, automatic accounting. G-, undo accounting. GD, accounting through direct entries. RD, jump to document summary. PRD, print document. TRF, transform a document into another one to use the data and/or associate it to another document. ASD, associate document to another one. And DCA, jump to associated documents. All these commands are first-line facilities to automation. Other commands may be displayed depending on the type of document. For instance, if the document concerns movements of stocks, then there will be commands to implement reflexes on stocks. Some of these commands will be illustrated in later chapters.
Among the commands available to treat documents, there are two which are widely applied and useful to support, monitor, and map business deals correctly based on documents. One is the command to associate documents. This command allows the creation of chains of documents. For instance, I can associate a purchase order to a supplier with the delivery bill originated from this order, and finally with the invoice and bill. Thus, the whole operation is chained and clearly mapped in the system. The other command concerns the transformation of documents. This command allows us to take a document and obtain another one from it by transformation and using great part of the original document. For example, if I invoice a customer every month, I can get an invoice from the previous month and turn it into an invoice for the current month. Another important use of the transformation process is in document chains. I can get a market inquiry, turn it into an order, then in a delivery bill, and then in an invoice and/or bill. In such a case, there would be no need to run the command associate. The transformation command would associate the documents into a chain. Another case would be the one regarding the transformation of pro forma invoices into final invoices. Let's see that.
By accessing business and tax documents, we ask for products related to pens. We see three documents in the beginning of the listing. Reading from bottom to top, we have an MCM, my market inquiry, for pens, and then an MNE, my order for pens, and next a TFT, a third-party invoice for pens. That is, we have a chain of three documents which relate to a purchase of pens. It's easily seen why the documents are grouped together in the listing, but this is not always the case. That's why it is important to be able to associate documents. To associate and create a document chain, simply click on the ASD command, Associate Documents, as indicated in the system. Before showing this command, let's click on DCA, Associated Documents. As we can see, this document is only associated to itself. It's the only one listed in the chain. Let's associate some documents. Only clicks are needed. MCM, MNE, MCM, TFT. Well, if you go to the invoice TFT and wish to execute the jump to associated documents, we click on the DCA link. We get the chain of the 3 documents I associated before. In short, I can associate and create document chains only by clicking, clicks which can be even executed in listings with different documents, thus allowing the association of a document from one listing to a document from another listing. This is very important to correctly map business operations. Let's see a transformation process now. To better understand the example, we have deleted 2 of those 3 documents, and so we have now only the first one, the MCM My Market Inquiry. We took this document and executed the transformation command and then click on TRF. A panel is opened proposing some criteria for the transformation. Let's change the type of document to MNE My Order and the date 2009 November 30th. We type an S for the new document to become associated and click on the new number. We finally click on the OK button and that's it. We have generated an order from the inquiry. Returning to the listing, we'll quickly carry out a new transformation of the MCM into TFT. Type of document, TFT. 2009, December 15th. Associate, yes. OK. It has been transformed. We then go back to the listing and refresh it. And so we have those 3 known documents rebuilt. If we select the first document and execute the jump command, we then see the chain with those 3 documents. That is, transforming a document with an association no longer requires it to be associated later on. As you can understand from this example, the transformation command is a tool that promotes greater productivity and error-free procedures when handling business and tax documents.
As seen in the introduction chapter, documents play a central role. Once they are registered, they are reflected in other subsystems. There are in general 2 important and well-known reflexes. One concerns the dispatch of the document to Treasury for payment or receipt purposes. The other one concerns its accountancy. We shall see that as follows.
Let's see, under Business and Tax Documents, the third-party invoice. Let's choose TFT 2012-00001. We can see it has 2 rows worth 4,000 each. It's confirmed. The code is 0 is shown by the color green. Let's assume the document is OK and ready to be paid. Just select a row and execute the Send to Treasury command. Here it is in Treasury. We can see the top of the Treasury transactions listing that the payable amount is 8,000. That is, the sum of the 2 rows of the invoice. And that is it. Regarding Treasury, the procedure will be payment and the accountancy of that invoice. Let's see how a document is automatically recorded in accounting. Let's go back to TFT 2012-00001. Its status is X0 because it has already been sent to Treasury. Click on G+. It is an operation in a third party's account. Account number 2111, General Clients. This is the Portuguese chart of accounts, as well as an operation in an expense account. The account number 6233, Office Supplies. The accounts are parameterized and vary from country to country and from organization to organization. The cost operation has been also attributed to the department D11, Activity B. This click will also be reflected in the budget if the system is parameterized for it. Moreover, if there are operations generated in fixed assets accounts, the same click will also generate the item in the fixed assets system.
Checking accounts of third parties and collections are essential to maintain financial flows in organizations balanced. Checking accounts must be previously fed on bonds, that is, debts. The process concerning the feeding of checking accounts with debts is performed by business and tax documents. It is then up to Treasury to deal with the respective payments and receipts. Let's briefly see how our software supports checking accounts of third parties. The deepening of this subject will be addressed in the module Management Accounting.
Let's access the menu of checking accounts. It is divided into three areas. The area concerning operations with checking accounts and collections, the area concerning the parameterization and control of credit limits, and the area concerning the control of balance aging lists. Let's see the work list of checking accounts. We see in here the evolution of the balance of each third party. Each group of operations belongs to a third party. The balance is shown in this column. Note that the dates range from the most recent to the oldest ones. Thus, on the first row of each group, we can see that the balance of their respective third party is highlighted in dark yellow. The balance for the first third party is 2,214.20 negative. Please note that unpaid debts are highlighted in darker green. The debt totaling 214.20 is 204 days past due. And this one totaling 500 is 194 days past due. As we can see, the debt totaling 600 has already been paid. We can see in here the credit status and then the debit status of the payment. It was paid by our check number 2244667, 276 days past due. Thus, in a simple way, we have gathered the main contents of checking accounts on this listing. It's quite clear that these operations are automatically generated within the scope of documents, treasury and/or accounting procedures.
We have had the opportunity of seeing in the introduction chapter the central role played by business and tax documents in organizations. The facilities mentioned earlier are well known in many contexts, but there are many specific issues that are very important to many organizations. there are significant differences among countries in many cases as well. Given the importance of these issues and the impossibility and even the inconvenience of wanting to address everything with a certain degree of detail in this single video, we shall see then just some remarks on a set of major topics. These are topics we consider important in order for you to better evaluate and understand our solution from the beginning. Let's briefly address the following topics: documents and stocks, documents and fixed assets, documents and public accounting, documents and taxes, documents and digital public bookkeeping, documents and electronic and certified invoicing. We apologize for this conceptual and general approach, but the consultants of the Altoga Network will be at your disposal to better explain all these issues in the specific context of our country and organization. The reflections on stocks are usually assured in specific circuits within the scope of the modules purchasing, consumption, and sales. However, let's leave the approach of these reflections to the video presentations of those modules. At the moment, we want to emphasize the following. Reflections in stocks are automatically assured from documents in real time. As for entries, quantities, average costs, and incoming stocks are updated. For exits, existing quantities, outgoing stocks, and bounded quantities are updated. Still concerning exits, the average cost is used to, at the time an item leaves the stocks, both value the document, in which case the average cost becomes a unit value, and reflect the sales costs on accounting. By properly registering documents on acquisition of assets in fixed assets, the system is smart enough to ensure not only the automatic accountancy of those documents, but also the automatic generation of the records of those assets in fixed assets. Naturally, these are temporary records, which the staff responsible for managing fixed assets are yet to confirm and add some information such as the exact location of the asset. Nevertheless, this is a huge increase in efficiency and productivity, since most of the information present in the record is generated automatically without costs or errors. More importantly, the fixed assets system is fully synchronized with accounting, thus avoiding problems and expenses incurred by the reconciliation between these two systems. We know how much time is wasted and its consequences incurred whenever the figures of general ledger accounts do not match the ones appraised in the fixed assets system, in the case these two systems are not integrated. In general, public administration needs, despite the specificities of each country, the implementation of a whole set of procedures often referred to as public accounting. In this context, documents have to embody all the important information for these procedures. We are talking about chains of documents which are typical of the public administration, from initial inquiries to final invoices, going through official requests and so on. One of the main aspects is the a priori budgetary control based on the concept of allocation of funds, often referred to as engagement and, in the case of Brazil, as commitment. Documents must include commitment or engagement figures, and the control over the amounts allocated for a particular purpose must be asserted in order for those amounts not to be exceeded by the ones of the actual documents at issue. And, of course, other procedures such as payment authorizations, different tax treatment and accounting, etc., must be addressed as well. We have many customers and extensive experience in public administration in many countries, So our modules, and particularly those related to business and tax documents, are well prepared for this context. The proper treatment of taxes is an essential requirement demanded by any application that deals with business and tax documents of organizations. In fact, if this issue is not well handled by the software, then it's not worth using it. As mentioned earlier, we will make a general conceptual approach targeting all countries and types of organizations which we work with, leaving the deepening of the subject as well as the explanation of each particular case to our consultants. This is an area for which we present a solution that differentiates us based on our extensive experience in contexts as diverse as the European, Brazilian, and some African countries. Note that nowadays, given the complexity of this issue, particularly in Brazil, many accountants deal with most taxes outside the applications that they keep, for instance, in Excel spreadsheets. This treatment outside the system is very inefficient and leads to many errors. Above all, the solution will no longer be feasible due to the growing demands of digital fiscal bookkeeping. Our choice is treating document-related taxes in two steps. The first step is in real time when issuing or registering the document, and then complementary to the real-time treatment in proper procedures for tax clearance. When there are few taxes, for example in Europe or in Mozambique, where the VAT is used, or in Angola, where a simple tax system is used instead of the VAT, it is reasonable to treat almost everything at the time of the issuance or registration of a document, and only a few totals and transfers among accounts are left to be carried out for tax clearance. Note that dealing with everything here means performing all the necessary calculations and accountancy automatically. As for Brazil, the situation is more complex due to the number of applicable taxes: ISS, tax on services; ICMS, tax on the circulation of goods and services; IPI, tax on industrialized products; PIS, social integration program; COFINS, social contribution tax; IRPF, personal income tax; IRPJ, company income tax; CSLL, company contribution on net profit, among others, many of which having a wide range of applicability. There is also a very important issue that should be taken into consideration: withholding taxes. It's becoming increasingly common to withhold taxes in documents in many countries. If we take into consideration that in cases like that of Brazil, such withholding concerns several taxes, we see that the complexity increases even more. In this sense, although our modules allow dealing with taxes in many ways, our recommendation is doing everything in a 100% integrated and automatic way. In complex cases in which many taxes have to be dealt with, such as the ones of Brazil, we recommend the following approach. 1. Take into consideration the taxes that affect the document values and that must be broken down when that document is issued. These taxes must be entirely treated in real time on the issuance or registration of a document. 2. Tax withholding, as they affect one important value of the document, the amount payable, essential for Treasury and Checking accounts, should also be handled in real time. However, in case there is much tax withholding and when only the value of the document to be paid is at issue, that tax withholding can be handled as an accrual in real time in the account called withheld values, against the respective account of third parties. Thus, the amount payable is quickly determined. Later, along the clearance process, such tax withholding shall be broken down by tax, thus paying off the withheld amounts account, which shall work as a control. 3. Take into consideration and select the documents along with the remaining taxes which, although they do not affect the key values of the document, must be broken down per document for purposes of the Digital Public Fiscal Bookkeeping systems. Note that this applies, for instance, to PIS, Social Integration Program, and COFINS, Social Contribution Tax, in Brazil. In this case, although this does not justify the accountancy of detailed entries for each document, the values must be calculated for each document in order to integrate the files of the Digital Fiscal Bookkeeping files to be sent. However, accountancy may be carried out during the clearance procedure by means of summary entries. 4. Finally, there are taxes like IRPJ, Company Income Tax, and CSLL, Company Contribution on Net Profit, to be addressed only in the clearance process. And 5. Temporary clearances may be carried out in order to provision the future payment of taxes. We have concluded this general guidance, which is very important and distinguishes our approach and our modules, with some appreciation on taxation and key values of documents. The key values of documents are the document value itself, the cost value, and amount payable. There are taxes like VAT that influence the calculation of these three values. Taxes such as the Brazilian ISS, tax on services, do not affect any of them. The ICMS, tax on the circulation of goods and services, however, affects the cost value, and the IPI, tax on industrialized products, depending on whether it's an industrial company or not, may affect all of them. As seen earlier, tax withholding affects the amount payable. Whenever a tax affects one of these three values, it should be treated in real time. Particularly in the case of stocks, it is essential to determine in real time the right value for cost purposes because of the calculation of the average cost. The nature of the calculation of the average cost of stocks and its implications do not allow any alternative other than calculating the cost value upon entering in the system the documents that affect the stocks. In conclusion, our modules have been designed taking all the foregoing into account and therefore provide you with huge gains in efficiency and productivity, and moreover are in line with the requirements looming in the near future in all the countries where we operate. In parallel with the dematerialization of invoices and bills, many governments have been promoting the dematerialization of fiscal bookkeeping and accounting in general, particularly the ones regarding the communication of information to finances. Examples of these are Brazil's SPED and Portugal's SAFT-PT. These are very different systems and therefore are also supported by the extensions to the modules that deal with documents and accounting that must be subscribed for each country. What's important to keep in mind at this point is that business and tax documents play a central role in fiscal SPED and SAFT-PT of sales, that is, in the SAFT file of documents. Our modules meet the requirements of digital public bookkeeping, but they are very different from country to country, and once again, further details may be obtained from the consultants of the Altoga Network. What we mean by electronic invoices is the latest form to issue invoices or bills that undervalues the paper element, which has been a key aspect since a long while, allowing their issuance by electronic media such as emails and/or their availability for download in sites. Such dematerialization has demanded and was followed up by certification techniques such as digital signatures. which have made this form of invoicing much safer in terms of falsification and/or tax evasion when compared with the paper format. However, the way these new procedures are being implemented varies greatly from country to country, hence the need to license, in addition to the general module, which is the M160, its extensions for each country. In general, there is a document created by means of standard processes. Some key elements of that document are submitted to certification procedures. In general, once a certification is attained, a key is granted which certifies the document as valid and makes it auditable either by applying a public key or, as in Brazil, by getting access to a central repository of electronic invoices provided by the state. Based on this key, any change to the crucial elements of the document, such as its number, date, or value, can be easily detected. We remind you that these documents are not issued in this module, the M210, but in the module M160, which is the one that meets the legal requirements of each country through its extensions. What we can see in this module is documents after being issued, for consulting and accounting purposes. Our solution, though it consists of modules, it's fully integrated, and this also holds true with electronic and certified invoicing, despite this specificity in each country. We have presented in this video the module for business and tax documents along with the necessary details for a first assessment by your organization. It should be emphasized that, in many cases, the implementation may and should be carried out in phases, starting with the most important scopes and basic treatments. In this context, we remind you that this dialogue can be deepened, so we can better analyze our needs and our answers to them. We and the network of partners we integrate are fully prepared to listen to and support you.